What's up, YouTube? It's your boy Bitcoin Lunatic. Today is April the 12th, 2026 on a Sunday, 3:51 p.m. By the time y'all hear this video, I don't know. It may be a month from now, 2 months from now, but basically I'm creating a, I guess if you will, like a trading series or a trading playlist. I'm basically going to be flipping this live account from $500 to $5,000. You know what I'm saying? However long it take. I'm going to be documenting every single trade I take. Every trade I take is going to be recorded live. I'm back trading New York session, so no more London session trading. So I will be recording between 8 to 11, you know what I'm saying, a.m. The recordings may not be long though. They may be like 30-minute recordings, 45-minute recordings each video. And basically it's going to be, you know, however many videos it takes to finish the playlist until the job is done. I will not withdraw any money until the account gets to 5K. I have been trading profitably in a live account. I have been withdrawing money, but I wanted to do a challenge where I basically challenge myself to flip 500 to 5K, because I know that doing a challenge like that will basically, I feel like, in my opinion, it will make me become a better trader. You know what I'm saying? Starting with so little capital. This is basically the introduction video to the series. Just wanted to tell y'all what was going to be going on. You know what I'm saying? That's pretty much, you know, the gist of everything. If you look to the bottom left corner, you will see, I don't know if I said this already, but if you look to the bottom left corner, you will see that it is a live account right here. So this is real money, you know what I'm saying? And basically, so my strategy is going to be, I guess you could say scalping. I mean, I don't know. Basically, I'm going to be, okay, so for example, in ranges, in consolidations, I'm going to be looking for liquidity sweeps and then to get on board with the opposite direction. In trends, I'm going to be looking for price to come down to a higher time frame PD array, whether it's an order block or a fair value gap. And then I want to look to get on side, you know, to continue the trend. And that's basically all I'm going to be doing. So my higher time frames are going to be the 4 hour or the 1 hour. So I'm going to give you an example of the specific trades I'm going to be taking. So as you can see, right, we have the 4 hour, this is the 4 hour chart, and we have a consolidation, if you will. You know, it's consolidating from here to here, right? And we take out the high, boom, we drop, we take out the low. But when we take out the low of the consolidation, we come into a fair value gap. So it's like, okay, we can look to get on side with some buys. So how we gonna do that? So from the 4 hour, I feel like the 15-minute is compatible with the 4 hour. So I would go to the 15-minute, right? We got the sweep. So all I'm looking for on the 15-minute would be basically a change in state of delivery. So I'll be looking for a set of down closed candles to be broken and closed above, right? So let's draw this out. So these are the down closed candles. Did it close above? Nope. It started consolidating, then boom, right here, we got to close above. So now that we close above this changes, this set of down closed candles, which is basically an order block, you know what I'm saying? I call it the change in state of delivery. We basically can look for this low that formed before it came here, or when it came down, this swing low that formed when it came back up. We could look for this low to hold. So we would enter at the close of this candle right here. It broke above and closed, so it closed. So we would literally press buy right here, and we would put our stop loss right here, because we know that this low will hold. And then we would aim for a 2-to-1, right? We would aim for a 2-to-1. So the market is closed right now. You know what I'm saying? Sunday, the market opened in 1 hour or whatever the case may be. But I didn't take this trade, obviously, but this would be a trade that I would have taken. And basically we can expect for price to come up and take these highs and continue higher. Now, sometimes as far as like TP, I can use the fib and I draw it from the low to this high, this change of state of delivery, right? And then basically that can give me some take profit area objectives. So we have 2, 4, and 6. So I can look to get out at 4. And I can look to get out at 6. But you know, we just really mainly just aiming for a 2 to 1. You know what I'm saying? So that's one strategy. Okay. Another way of looking at it is, let's see. Let's use the 1 hour. This would be like more of a scalping formation. But basically, if I want the trade to finish faster, because this is a 15-minute chart. Well, if you go down on the 15-minute chart, it's going to take a while. Maybe 3 to 6 hours to hit TP. I don't really genuinely like to be in a trade that long. That's not really that bad. You know what I'm saying? Especially if I'm aiming to make about $300 per trade, you know, 6 hours to make 300, that's not bad. But if I can get out faster, you know, that's what it's all about. So right here, we have a swing high broken. This swing high, this swing high. Broke 2 swing highs, and then we immediately broke a swing low. So we have consolidation, right? Met with expansion. This is expansion right here. And we broke this low area right here. So basically, we want to get on side with this move, but we cannot just sell. When it breaks, we cannot just sell. What do we wait? We wait for a retracement. A retracement into what? A higher time frame premium discount array. So this is a fair value gap. I'm assuming just by eyeballing it, it's at or near equilibrium of this price swing right here. I like to use the bodies. You see, I use the body right here and the body right here, and then I draw it out. Boom. Right? So let me erase that line. Let me erase this. So as you can see, it's right above equilibrium. So this is technically a premium, or this is a discount array. So this is a discounted price. In this expansion leg, this is considered discount because it's above equilibrium. So we would basically be looking to get on for sales right here on the 5-minute chart. So you're like, okay, what do you look for? What do you look for now? Okay, when price comes to the fair value gap, one thing that you can do, you wait for a C2 sweep. Basically, you wait for one, you got one candle, right? Boom. You waiting for the second candle. You want to see one candle basically break the high of a previous candle and close back into the range of the previous candle, which was done right here, right? It's called a C2 sweep. So this candle broke the high of the previous candle and it closed back into the range. So once price does that, we wait for the next hour to come. So there's at 1400 and we go down to the 5-minute. Go down to the 5-minute, you know what I'm saying? Come on. Well, let me see. We go down to the 5-minute. Where is it at? Go down to the 5-minute, right? So basically, when that next candle opens up, all we waiting for is for a set of up close candles to be broken and closed below, and then we enter for a sale. It's that simple. Because we already got the C2 sweep. So on that third candle, all we're doing is waiting for a set of up close candles like this right here. 1, 2, 3, 4. You see those up close candles? We basically want to see price break and close below it, right? Which it did right here. So once it do that, we sell. So we enter for a short position right there. Or another thing that we can do is if it's a big candle like this, what I generally like to do is draw it out from the high to the low of the body and pull it out. And when price comes to equilibrium, I will look to take those sales. You know what I'm saying? But let's keep it, you know, classy and, you know, regularly simple. I mean, I guess. So boom, price comes down and breaks. Boom, you sell right there. You can put your stops. This is a big candle. So when the candles are genuinely this big, I genuinely would just put my stop loss at the top of the body. You know what I'm saying? And this may be a trade that we got stopped out at, but let's see. So we would aim for a 2 to 1. And it's a lot of ranging going on because this is, this is not New York time frame. This is just me just showing y'all the strategy at a random time. Woo. Oh, yeah. It would have took a minute and it still wouldn't have panned out. Would have got stopped out. But it would have gave us a 1 to 1, and we would have moved our stops to break even, and we would have got stopped out. You know what I'm saying? That's just what comes with it. But this is the strategy that I'm going to be using. You know what I'm saying? I do have other ways of looking at it. If y'all want if y'all want to see something, okay, boom. We have this high right here that's broken, right? But it's met with expansion. So you have expansion and then expansion. That's not a retracement. That's a reversal. Meaning when price starts to come back up and it gets in, we know that it's retracing. You know what I'm saying? It's not continuing because expansion met with expansion is a reversal, especially when we just took out some liquidity. So we took out this liquidity and expanded back into the range, right? So once we do that, we're on the hour chart like, bro, this some shit that I taught myself for real. That like I don't have to go down to a smaller time frame. So boom, we know that we're looking for sales, right? We're inside of the fair value gap. We want to see a C2 sweep. You know what I'm saying? If we don't have a C2 sweep, we want to just see a swing high. So we have 1, right? 2, 3. We got a swing high on the hourly chart, right? Because we didn't get a C2 sweep. This candle did not break above and close inside of the range of the previous candle. This is an up close candle, so it closed up here. So when I see that, I'm like, okay, let's see if the third candle is not going to close above the high of that second candle, creating a swing high. So that's exactly what happened. The third candle did not close above the second candle, basically making it a swing high. Hold on, let me check my phone, y'all. Okay, bet. So once it does that, I would take the fib and I would draw it from the high to the low of the third candle and expand it out, right? Once price gets to equilibrium of that candle, I would want to sell. As you can see, we almost came to it. You know what I'm saying? I can give myself grace. You know what I'm saying? Let's say I would have went short here. I can give myself grace. Going short there is right, basically right at it. You know what I'm saying? You don't want to miss a move and it's that close, And let's say we just aim for 2 to 1. We would get it very, very fast. We would get it very fast. But let's say we aim for the 6, which is like the ultimate, target that I usually would aim for. That would give us a 9 to 1. And then if we, aim to take out these lows right here, you see that swing low? We aim to take out those lows. That would give us a 22 to 1, which is insane. You know what I'm saying? So imagine risking $1,000 on this trade, or even, $100 on this trade. You would get something, pretty substantial. I was looking for a one that I can show y'all that's more like faster as far as like the entry. That one would have took a little minute for the entry to touch it. But right here we have a swing high that's broken. We broke that swing high with expansion. We created a fair value gap. We came back into the fair value gap and we created a swing low. On that third candle of the swing low, we draw the fib out from the low to the high and we expand it out. Now this is what I mean. This is what I like to see. On that very next candle, it touches equilibrium. This is what I like to see. And when it touches that equilibrium, you jump in for a buy. Boom. You just simply buy right there. You put your stops at the low of that candle. And, if you aim for 2, which is the first target, you get a 4 to 1. And that's in 1 hour. This is a 1 hour candle. You know what I'm saying? So I really don't want to aim for anything over 4 to 1, really over, I want to stay 4 to 1, 2 to 1, 3 to 1. Those are my targets. I really don't want to get into the 5 to 1s, the 8 to 1s, because those trades tends to take a little longer. As you can see, if I would have aimed for the 4 extension, it would have gave me an 8 to 1. But look how long it would have took. This is an hour, the hourly chart. So it would have took 1, 2, 3, 4, 5, 6, 8, I'll say about 20 hours. We'll do 15 to 11. What? 15, 16, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 18, 19. It'll be about 19 hours. Who trying to wait 19 hours for 8 to 1? I'm not. When I can simply, you know, aim for a little 4 to 1 and get it in 1 hour. I'm really not trying to hold my trades longer than, I would say, an hour. So it's like, even though some of my entries will be on the 1 hour or the 15-minute, I'm still scapping because I'm only aiming for 2 to 1s. You know what I'm saying? So my trades not going to take that long to pan out. So basically, this is my strategy, and this is what I'm going to be looking to target. This is a trend. This is called trend trading. And then when we have our consolidations, our ranges, basically we'll be looking for highs to be swept. You know what I'm saying? Highs and lows to be swept when we're inside of our ranges or whatever the case may be. Like this right here, this is kind of like a range or consolidation. I'll be looking for, I would look to sell. I would look to sell right here. You know what I'm saying? I would look for buys right here because it's like it's not trending. So it's like I can't take this and be like, oh, it just broke this low. It's going to retrace. You know what I'm saying? It did come into this fair value gap. And then it dropped off. But I would still look to buy that. You know what I'm saying? Aim for a 2 to 1. On the 15-minute chart, I definitely would get my TP. And on the 5-minute chart, for sure. Looking to aim for that. And then what we have more consolidation right here. You know what I'm saying? I'll be looking to short those highs of the consolidation when price came right here. I would, go down to my lower time frame or this time frame, and I'll be looking for sales. It's the same thing. Like, let's say I don't want to change the time frame. You have a C2 sweep right here. Price swept the previous candle's high and it came back into the range of the previous candle. Okay, that qualifies. So I would take the high and the low and I would extend it out. And when price comes to equilibrium, I would look to sell. Price came to equilibrium on the next candle. These are the trades that I love to see and love to take. I love when it hits it on the next candle because that's what I be looking for. Ain't nobody trying to be looking at the chart all day. You know what I'm saying? We put our stop loss at the high and we aim for the first extension, which is a 2. That's going to give us a 4 to 1. Look how quick that was. This is the hourly chart. So it took 1, 2, 3, 4 hours. That's not bad. Remind you, we aim for a 2 to 1. We would get it in what? 3 hours. Aim for a 3 to 1. It's going to still be 3 hours because it's still on that candle. Aim for a 4 to 1. 3 hours. You see that? That's a 4 to 1, and that's 3 candles. 1, 2, 3. 3 hours. So this is really the strategy I'm going to be trading. Let's see, man. I know we can do it, man. Let's see how it goes. And with that being said, we are out. Oh, what the fuck just happened? And that being, what the fuck? What just happened? Oh, let me take that off. Is I pressing something wrong? Oh, okay, there we go. And with that being said, we are out.